This example relevant for debtors reconciliation. It has given total of debtors ledger balance as at 31st March 20. This is the debtor ledger balance mean debtor list balance. Individual debtors account balance 20,200 values in thousand, and debtor control account balance. Debtor control account balance is given 15,000. Think about debtor list balance. Debtors ledger mean debtor list. Individual debtors account balance total value should be equal debtor control account balance. But as at 31st March 20, debtor list balance is not equal debtor control account balance. In this situation, reason for difference should be provided. For that, we have to prepare statement of debtors reconciliation. Think about control account available in the general ledger. Therefore, if errors occur in the general ledger, should be adjusted control accounts. But if errors occur in the debtors ledger, should be included statement of reconciliation. And if it is given completely omitted or erroneously recorded in the primary books, those should be recorded both adjusted control account as well as statement of reconciliation. There are three things you have to know. First one, errors occur in the general ledger should be adjusted control accounts. Errors occur in the debtors ledger should be included statement of reconciliation. Then if it is given completely omitted or erroneously recorded in the journal, should be recorded both adjusted control account as well as statement of reconciliation. Right, it has given control account balance equal 15,000 closing balance. This is an incorrect value. If it has correctly recorded, control account balance should be equal this balance. Now as a balance brought forward in the adjusted debtor control accounts, 15,000. Debtor control account balance, record values in thousand. If it has correctly prepared, here closing balance should be equal, this answer should be equal this value, 20,200. Right. If errors occur in the general ledger, control account should be adjusted. First one, rupees 18,000 worth of bad debts was not recorded in the debtor control accounts. Effect for debtor control accounts was not recorded debtor control accounts. Therefore, debtor control accounts credit as suspend accounts, not as a bad debts. Reason it has not recorded only debtor control accounts. Therefore, here as a suspense accounts. As a suspense, second one, total amount of sales journal was undercasted. Sales journal total amount also effect for debtor control accounts. Therefore, sales effect for debtor increase. Total amount of sales journal undercasted. Therefore, sales account credit, debtor control account debit. Total amount of journal undercasted, overcasted, notified for suspend. Therefore, here as a sales. Think what errors occur in the general ledger should be adjusted control accounts. But next one, third one, debit balance of individual debtors. Individual debtors. Individual debtors available, debtors ledger. Rupees 700,000 was not included debtor list. Think about individual debtors account balance should be included debtor list. But 700,000 worth of debtors balance was not included debtor list. Therefore, think about debtor list balance decrease. It is relevant for reconciliation. When some information included in the reconciliation, see the effect for closing balance, this balance. If effect for this balance, closing balance increase, those should be added. If effect for closing balance decrease, those should be deduct. That is the theory. When we are going to prepare the reconciliation statement, we have to decide add or deduct. See the effect for closing balance. If effect for closing balance is increased, should be added. If effect for closing balance is decreased, should be deduct. That is a theory. Now think about third one. Debit balance of individual debtors 7,000 was not included debtor list. As a result of that, debtor list balance decrease. Debtor list balance decrease, therefore closing balance decrease. This is a balance as per debtor list. Here balance as per adjusted debtor control accounts. Adjusted debtor control account closing balance would be included here as a balance. Then addition, deduction, then balance as per debtor list. Therefore, as a result of this third one, effect for debtor list balance decrease, therefore closing balance decrease, therefore should be deduct. Additional third one should be deduct. Effect for debtor list balance decrease. If effect for debtor list balance decrease should be deduct 700,000. See the effect for closing balance. Try to recognize how to decide add or deduct. Then fourth one, when balancing individual debtors accounts, debit side overcasted. It is also effect for individual debtors accounts. When balancing individual debtors account debit side overcasted, think about debtor is asset. If debit side overcasted, individual debtor balance also increase. If individual debtor balance increase, it is effect for list balance. Therefore, list balance also increase. Therefore, closing balance increase. If closing balance increase, it should be added 2000. But 5 and 6 very important. It has given 4,000 worth of sales invoice completely omitted. Effect for both. Completely omitted. Therefore, it should be adjusted control account as well as statement of reconciliation. Think about sales invoice completely omitted. Therefore, sales account credit, debtor control account debit. Debtor control account debit as a sales. As well as complete omitted. Therefore, it has not recorded in the individual debtors account also. Therefore, individual debtors account balance decrease. Therefore, list balance decrease. Therefore, closing balance decrease. It should be included statement of reconciliation deduct. Effect for closing balance decrease. Transaction number 5. 4,000. Think about if it has given complete omitted, it should be adjusted control account as well as statement of reconciliation. Complete omitted, therefore individual debtors account balance also decrease. If closing balance decrease should be deduct. And 6 one also same way. If it has recorded erroneously in the prime end books, also effect for both adjusted control and reconciliation. Rupees 400,000 worth of sales return. Sales return was included sales return journal as a 40. Sales return journal is a prime end books. Recorded incorrect value. Therefore, if recorded incorrect value in the journal, it is effect for both adjusted control account as well as statement of reconciliation. Think about sales return should be credit in the credit debtors control accounts. But it has recorded only 40, therefore balance part 360 should be credit again as a sales return. And think about individual debtors account balance also. 400,000 worth of sales return included in the sales return journal as a 40. Therefore, individual debtors account also recorded as a sales return only 40. Therefore, sales return recorded under costed value. As a result of that, individual debtors balance increased by 360. Therefore, individual debtor balance increase. Therefore, list balance increase. Therefore, closing balance increase. Therefore, that value should be add. Transaction number 6. 360. Sales return recorded individual debtors account also under costed value. Therefore, effect for individual debtors account balance increase. Therefore, closing balance increase. If closing balance increase should be add. Then take the adjusted control account balance. Debit side increase. Debit side total amount take value 23,700 and take that value credit side Then deduct 800 as well as 360. Therefore, debtor control account closing balance equal correct value 22,540. Balance brought forward. That is a value should be included statement of reconciliation 22,540. Then take total addition. Total addition here total amount equal 2,360. Then this one plus this one take answer here. Therefore, here value equal 24,900. And then take the deduction total value. Deduction total amount equal 4,700. 4,700 within brackets. Total deduction. Then deduct 4,700. Therefore, 20,000. 20,200. If it is correct, this value should be equal debtor list balance. Think about when business going to maintain debtors control accounts. If those are recorded correctly, control account balance should be equal list balance. If those two balances are not equal, there is errors. Sometimes errors occur in the general ledger, sometimes errors occur in the debtors ledger. Therefore, errors occur in the general ledger should be adjusted control accounts. Errors occur in the debtors ledger should be included statement of reconciliation. When some information included in the reconciliation, see the effect for closing balance. If effect for closing balance increase, should be added. If effect for closing balance decrease, those should be deducted. Think about there are three types of information available. If errors occur in the general ledger, control account should be adjusted. If errors occur in the debtors ledger, should be included reconciliation. But if it is given completely omitted or erroneously recorded in the journal, should be adjusted both adjusted control account and statement of reconciliation.